Few things breed investor confidence like an 8-month winning streak. Where do we stand? Were you nervous in October 2022 near the stock market lows due to inflation concerns? When the S&P 500 was around 3,600? Were you still waiting in February or April of this year with the S&P 500 recovering to 4,200 due to debt ceiling worries? Now that those events have passed, has FOMO or the fear of missing out set in? Are you feeling better and confident now that cash S&P 500 is above 4,200, 4,300, near 4,400, like many late to the rally strategists? Are you now seeing and reading the daily stories about AI, artificial intelligence being the next big investment wave? Do you now feel like you have to do something with your portfolio? Do you have to buy something sexy and growthy because we're back in the good old days? Are you once again convinced that greed is good? I'm Chris Perras, Chief Investment Officer with Oak Harvest Financial Group, and this is our investment team's midweek release when we examine a news item, headline, or story making the rounds from publicly available sources, and we ask, is it news or is it noise for your money? This week, I give my thoughts on FOMO, the fear of missing out. And even though I'm a capitalist at heart and I love the 1987 movie Wall Street, contrary to Gordon Gekko's speech in the movie, greed is not good.
Greed, for lack of a better word, is good.
I repeat, greed is not always good. Until recently, I received pushback for almost 10 months from almost everyone I talked to about the markets, arguing against our idea that volatility had peaked back in mid-2022 and it was set to decline. That the spot volatility in the VIX index, which I hate as an indicator, but many quote, while it was trading back then around 30 to 32, was headed back to 14 or lower into the second quarter of 2023, and this would cause the markets to rally to at least 4,300. That was our first half outlook back last December. Well, investors, both forecasts have now been exceeded slightly, and those same individuals who argued against a lower volatility trend are now out publicly spouting the idea that we are in a new volatility regime change to lower volatility, that now they're out touting the story of greed is good. Here's a chart of the S&P 500 since last October's lows, when many were busy forecasting a recession or worse. Is now a time to panic and buy stocks back if you were shaken out in the markets in 2022? We don't think so. Once again, I must take the other side of this argument about volatility in the markets for the next 2 to 4 months. Investors, volatility is most likely set to rise from here, not decline, and that would create a headwind for equities this summer. While we don't use the spot VIX index as a forecasting tool, we do look towards forward tradable insurance markets, as we've previously discussed. Our tools, the same ones that I've talked about multiple times over the last few years when there were twists and turns coming, now say that it's time to pull in those bull horns for a while. Go slowly and wait for some great opportunities coming later, farther down the pipeline this summer. Forward insurance markets say that while future volatility will remain subdued, we are due for 2 to 4 months or so in a rise in volatility and pullback in stocks. Yes, just as everyone gets confident that stocks are breaking out and many late to the party strategists revise up their targets for the markets. This forecast should come as welcome news to long-term investors. Why? Because the data provided by LPL Group says the average forward 1, 3, and 6 month gain in the S&P 500, while more volatile over the comparable time periods, is almost double the return of the S&P 500 when the spot VIX index is at its highest quintile range versus when the spot VIX index is subdued under 13 and a quarter. Yes, uncomfortable or not, investors should crave higher volatility to give them lower and better prices to enter stocks. So as we head into the July 4th weekend in the heat of the summer, and with the S&P 500 close to 20% since the mid-June 2022 lows, front page stories are currently hot about AI, ChatGPT, and large language model technology. They're virtually everywhere a growth investor looks. Should you listen to these soothsayers who incorrectly missed the 800-point rally the last 8 months and rush in and finally buy? Our team says no. These stories are not news. Take a deep breath and don't let FOMO and greed control your investment actions this summer. Are you trying to meet your needs or your greeds in retirement? Give us a call here and schedule an initial consultation with an Oak Harvest advisor. We will sit down with you and help you and your family do the math to figure out if you'll be able to meet your retirement goals and needs. At Oak Harvest, we think our clients are best served by us helping them plan for their future needs instead of focusing on the past. The future is always uncertain, and that's why our advisors and retirement planning teams plan for your retirement needs first and your greed second. Give us a call to speak to an advisor and let us help you craft a financial plan that helps you meet your retirement goals. Call us here at 877-896-0040 and schedule an advisor consultation. We're here to help you on your financial journey into and through your retirement years. I'm Chris Perras, and from the whole team here at Oak Harvest, have a blessed week.